All right, good morning. Welcome back here to Trader Money. Great to have you aboard. Yesterday afternoon, I did a video talking about the case for panic in this market. And while I don't think the full blown case is going to, transpire, we are seeing elements of it unfold here in the last 12 to 18 hours. And market reacting and reacting in a proper way to it, meaning, a way that we can expect to that type of news. The panic is in, the margin calls are in. Market futures were halted again overnight, just like they were Monday, as they were down 5%. Then the market itself was halted 4 minutes after opening today, as the S&P was down 7%. So, we saw the two halts. And here in today, if I zoom in, we saw a market rally from 24.92 up to 25.88. We saw a 95-point rally in the market happen in 7 minutes. 95 points. That's over 3% in 7 minutes. Yeah, 3% in 7 minutes. It's just phenomenal pace of movement. It does rival what we saw in the financial crisis. It is definitely greater than anything we've seen in the last 5 to 7 years here in the market. As these moves, these pops, these drops are absolutely insane in terms of the volume and the magnitude here of them. A lot of it computerized, a lot of it, just the algorithms kicking in. But we have a lot of margin call action going on out there. And there's a contingent out there that looks and says, hey, you know what, I can step in and buy a little bit here and there. So we are seeing some of that, but overall the the story that is playing out with the coronavirus is so far worst case scenario. We saw U.S. President Trump on TV last night announcing or speaking to the U.S. nation, and what he basically laid the blame for all of this at the feet of Europe. He halted travel between the U.S. and Europe. I think that goes into effect Friday night. And that has a dramatic effect on trade here as well. So we saw that. It's one where we are starting to see schools close. We talked about some of the sporting things yesterday. The NBA is being suspended. Major League Baseball probably will suspend. Major League Soccer is being suspended. They're looking at suspending the NCAA tournament from a sports standpoint. I know a lot of different religious groups have suspended services. And here this morning, I'm waiting to hear from the Utah governor. Obviously, I live in Utah. Because we've talked about, what's going to happen school-wise and everything else, and it looks like, schools are going to be closing. I know 75% of them are already closed in Virginia, in other places around the country, and so we are seeing a behavioral change in the population. When we talk about the stock market impacts, right, I'm not talking about the humanitarian impacts of it all, but the stock market impacts of the coronavirus. It's not the virus that's the impact, it's the change of behavior of the population that is the massive impact. And there's no way for investors to quantify it. How do you quantify it? How do you quantify what the impact is for something like Carnival Cruise Lines? I mean, yeah, they're not going to be running cruises for a while, and it's going to be a really bad quarter or two. But is their business dead in the water? Are cruises never going to happen again? Probably not, right? And so you look at something like this and you go, okay, American Airlines. Are people going to stop flying? No. They're going to come back. They're going to be flying. Yes, American Airlines going to take a hit here, but they're not dead in the water, and they're trading as if they're dead in the water right now. And it just tells you there's still that heavy panic effect, in play in the market right now, and nothing's being spared. You say, well, let's go buy gold. Gold is safety. Yeah, gold's down 3% today. Yeah, it's outperforming the market, sure, but it's not safe. I mean, you take a look at Barrick Gold, my favorite gold miner. I may have to dip my toe in a little bit here today, but this thing has been taken to the woodshed here as well. Apple, Micron, you name it, they're just not safety in this market for investors to get into. You look at utilities and you say, well, utilities, they always hold up during these times. No. Utilities have been hammered and hammered very hard. So we're in the panic, process here, and the it's not going to go away, here tomorrow. It's not going to be solved here today. And the scenario we talked about yesterday with panic ensuing and some of the global leaders letting that panic, continue for a while and then stepping in and kind of playing the hero for the market. I still think that's what we see play out. I think that is, the ultimate scenario that we see play out. But there is a chance that today's action is a bottom, depending on some of the volumes we see, depending on some of the price action we see. But it's certainly not one that, from an option standpoint, is very easy to go after. You got the VIX up another 20% here today. The VIX went all the way up and it hit 69 here this morning. Just to put that into a long-term context. That's bigger than the flash crash. That's bigger than the European debt crisis, than Ebola, and it is only rivaled by the lows that we saw, or those panic days that we saw in late 2008. The VIX wasn't this high during the bear market of 2000 to 2003, where we had the tech wreck, right? The VIX is higher than it's been at any of those periods of time. And what does that tell us? It tells us that what we are seeing is absolutely historic. It's absolutely historic. And when we see historic events, we don't have the normal market tools. You can't sit there and break down AT&T's fundamentals or Visa's fundamentals and say, well, based on the fundamentals, blah, 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 this stock is it's going to find support at 170 and it's going to, do X, Y. It's ludicrous. Past history shows us that it just doesn't work that way. It's not like you can look at the chart and go, well, okay, this is a nice support level, or say, well, 160 is something. All of that is guessing game, and with some of the randomness that's out there, or some of the I shouldn't say randomness, some of the panic that's out there. Trade decisions and investment decisions are not being made based on fundamentals and technicals that are supportive. They're being made on panic. They're being made on margin calls. They're being made on fear that the economics and the earnings are going to get worse, and in many cases in a forced sell position. And so we continue to see, that, and we continue to see kind of just some of the monster moves, here in the market. As today we've had a 95-point rally, and on any other day for the last 5 years, a 95-point rally on the S&P would be absolute headline material, would be something where they're just going, wow, what was the news to cause the bulls to run like that? And in this market, 95-point rally, not many people even notice. And speaks volumes to, what is out there. This environment isn't going to change here for a little while. When we have a historic environment, it just doesn't change overnight. And it's something where, we are looking at it in terms of the challenge, because the challenge is specifically built not to be involved in historic moments. Predicting things during historic moments is pretty ludicrous. So we've been looking at several things, several different options on what to do challenge wise here, trade wise here during this time period, as it does look like it is going to linger for quite a bit longer. I'm going to speak to that here this afternoon and talk about some of the challenges and some of the solutions here, to it. So we'll be doing that in the afternoon video. But it is one where market conditions unchanged here this morning. Just the same conditions out there that we've seen, the same bear market conditions that have existed for a while. And anything you want to be a buyer of, can you go out? Can you buy? Right? I've dipped my toes into a few areas. I'm looking at Bank of America this morning. Do I dip my toe in a little bit more here? But I have to realize that I'm dipping my toe into a falling knife, and that I might get a day pop, I might get a day drop, but I better be comfortable with being a buyer at this level and holding at this level for a significant period of time. For me, there are stocks where that is the case, because I can go and I can look and I can understand, hey, I know why Bank of America is trading here. I understand it. I get it. I know it could go to 15, but I'm also pretty comfortable that it's going to be trading back up above 24 at some point. So anything below that, I feel like I'm getting a bargain. It doesn't mean I'm going to be right in the next week, month, or even year. But in the long term, I do expect that I will be. So I've dipped my toes into a few areas. I've talked about it. But please keep in mind that if you're dipping your toe in anything, it is dipping your toe into a free-falling knife here. And that isn't showing many signs of changing. Thanks for hopping on. Look forward to talking to you here this afternoon. And we'll talk to you then. Take care.